Hello and welcome Forex traders. Steve here with tradingforexforprofit.com. We are looking at the Swiss yen on the daily time frame this afternoon. It is Monday, August 11th, 2014. I've opened a pending buy order on the Swiss yen daily time frame based on this stop hit pattern that's formed right here. So let me talk about the importance of waiting for an area of support or resistance to be established before trading. Okay, and what I mean by that is right here there's a bounce. Traders see this signal, they misinterpret this as an engulfing signal, it's in no man's land. They jump in with a long order, maybe on a pullback. They think they're doing good until they don't get out here. They're targeting some unrealistic level, and then the market swoops down, takes their stop orders, and off we go to the upside. Okay, so we wait for the level to be established, then we wait for the signal upon the revisit of that level. Okay, so here is the bullish engulfing spike with a long wick that took out all the stops that were under here, and it went deep. This went very deep, telling me that there was a lot of stops to hit here, and which it did. We took out the outer Bollinger Band. I'm waiting on a pullback for my entry to keep my 2 times profit right here at this most recent high. And I think that with a signal this strong, we're going to perhaps see a push further up into this level before any kind of a pullback is in sight. I think this week we're just going to see this Swiss yen just rally. Okay, based on this stop hit and the degree of how deep it went. Now, the question is whether or not we see a pullback enough to take my entry. That's what's in question. However, because there are so many trades that are continuously going on in the market, and I'm not going to chase it. I just set my pattern up the way that I always do. I target my 2 times profit, and this is where I expect it to go without any doubt. So that's where I want to have my 2 times profit. So that's why I moved my entry back to here. Okay. If I take the entry here, yeah, we're still under this level. However, I don't want to do that. I want my 2 times profit to be here. If it doesn't pull back, we just don't take the trade. So I'm guessing if the market moves and closes higher for the next 2 candles, I'll probably up in this range. I'll probably just cancel this order. I'm not gonna wait for a big arch up into here, because that's pretty much my target. So if it doesn't just do a gradual fall off over a few candles or a quick retrace to take my entry, I'm just going to cancel it. But otherwise, nice trade opportunity here on the Swiss yen daily time frame. All right, welcome back traders. We set our pending order on Monday the 11th. The following day the market swoops down, takes our entry. It looks like we moved approximately 4 to 5 pips beneath our entry, taking our order before continuing the march back up to our target. Now, here's what I want to talk about. Had I not set this entry as a pending order on a pullback, my profit target would be well up into this range. So, as you can see, it's Friday. We're testing this level right here, this high. What I expect to see happen at this point is to watch the market fall off. Okay, as it does, people that are in this position long are going to sell. Okay, people that waited until the break right here are going to sell, and they're going to sell it back to the market who's buying and force the market to continue higher. Okay, so you're going to more than likely, more often than not, you're going to see a swing back down, take some stops from the breakout traders before continuing on up. I don't want to ride that out. I don't like to ride that out, because you're just betting on the come. You're betting that something's going to happen, and you have really no hard data to support what it's going to do from this level. However, like we already know, the most recent higher low has a real high probability chance of being tested again, which, as you can see, it's doing right now. Okay, so to recap, the bounce establishes the level, the stop hit, okay, right here, the bullish spike that is also engulfing. We enter on a retrace. We place our stop 5 pips below the signal. We set our entry, okay, to take the entry based on a 2 times profit target at this level, at this high, exactly. Okay, if you wanted to perhaps come back deeper, you may not have taken that. If you so at best, right here at this level, you don't want to go any higher. Okay, so that's the point that I'm trying to make. You don't want to be up in here in this range. Okay, just because unless you want to ride out the bounce, which, like I said before, we really don't know what it's going to do. So, a real simple pattern to trade. Learn to watch for the stop hit because it's very powerful, and the market tends to respond rather nicely and fast and swift to these stop hit taking exercises. Also on the daily time frame, you'll see that they're extremely powerful. Okay.